What a crazy market, what a crazy week. I don't usually say this, but this officially can be called a Bitcoin crash. In a regular market, every time we come online, Bitcoin drops 2-3%, and then we'll have comments saying, hey, look, Bitcoin is crashing. Can you explain? Well, now you see a real crash in Bitcoin, but we're still here because, we've seen this before. So in today's video, I want to discuss a few things. Number one, where will Bitcoin find its bottom in terms of price? Is this a good time to be buying? And how close are we to a typical bear market bottom price? Second, what about the timing? How long can this official bear market last? So we'll look into that based on both market cycles, how long the bear markets last, but also some of the macro and political catalysts, events coming up this year. And that's it. So I'll give you some key levels that I'm watching and my current plans, how I plan to buy this extreme fear in the markets. So let's get right into it. I don't know why I'm sitting all the way down here. Hold on, give me a second. Let me move myself up a little bit. Why am I so... Did I zoom in too much? Here. That's better. Okay. Let's go. So, I feel pretty okay today overall, because even though Bitcoin is at 65K, if this is your first bear market, you would be panicking. But I've been exposed to Bitcoin somewhat since it was $3,000, and I've been in this rodeo before. The biggest opportunities in crypto, in Bitcoin, happens during the period just like this for the next 9 months or so, even though nobody will be able to tell you that, oh, this is a really happy time, a very fun time, but the time to allocate is now. There's no question about it. So let's get right into it. I want to point you to the macro. Let's start with that. So we will get into price charts a little bit, but I want to give you some of the macro events first. So why is Bitcoin not seeing the effects of liquidity, effects of debasement, the de-dollarization trade, as we see in gold, in silver, and in other commodities? And why is it getting decorrelated? So we have covered this point before, but there are a couple main drivers. Number one, let's talk about liquidity. So the global liquidity situation right now is like this. We have all of the central banks in the world are officially easing, except for Bank of Japan. But Bank of Japan just does the opposite of the Fed. So as you guys know, the Fed has started to increase the size of their balance sheet as of November of last year, as you can see right here. After all of this downtrend, it's now starting to bump up. But they're going very slowly because they have only announced the first RMP program, reserve management purchases program, that lasts from November until mid-April. And they have a set budget of 40 billion per month. That's the rough number. So while that has been happening, if you look at the general liquidity across the three segments of the US central bank system, you see that liquidity hasn't even gone back to the normal conditions that we had over the last 3 years. And you see, since this drawdown here, this basically coincides with the liquidity drawdowns here. If we take out the offset bars, they will pretty much match up exactly. So why is this? This is largely driven by the TGA, the Treasury General Account, because out of these three segments of the US central bank liquidity, we already saw that the Fed is increasing their balance sheet. We have the reverse repo that already has bottomed. You see? And it cannot add more liquidity. So the only outstanding factor now is the TGA, also known as the Treasury General Account. This is the checking account of the US government that sits at the central bank, at the US Fed. And you see here, this drop coincides with this drop in liquidity as well, as taken up by the refill of the TGA. So why did this happen? And why are we even talking about this? Okay. We know that from a general level, as a general concept, when global liquidity increases, Bitcoin increases, altcoin increases. But we also see that everywhere else, whether you look at the ECB is easing, okay? Liquidity is going up. You look at the PBOC, the Central Bank of China, going up. The only, you look at other smaller central banks, overall, they have been increasing their central bank liquidity. The only two that are rough right now is the Bank of Japan. Bank of Japan is going the opposite way, as we have outlined before, because the yen and the dollar, they trade hand in hand. So this is a situation that the BOJ heavily follows the US Fed. So that's why they basically do the opposite. Now, since the Fed is increasing liquidity, why is the TGA still draining liquidity? Why are they doing this kind of opposite on themselves? The answer here and why it's important lies with this. So this year we have the midterm elections coming for the US. So what the midterm elections are is the year where all 435 seats in the House of Representatives and roughly 1/3 of the 100 Senate seats are being re-elected between the two parties. This is in the year that the president changes, but it's the year where the control in the House and the Senate changes, which really impacts how much power the party will have and how much power the president will have in the last 2 years of their term in office, which are the next 2 years. So as you can see, this usually happens in the first week of November, and we are in the midterm election this year. So first week of November 2026, we will have the results of this. The reason why this is all linked is because we have covered it before. The TGA account, the balance is right here. This is the checking account of the US government. So the reason why this is increasing and the government led by Trump is not putting this liquidity back into the system is because they need this money. They need to save this money in order to do something big towards the end of the year. I want to point you to maybe the video that I have done on this before. I can't really pinpoint it. But we have covered the Trump dividends. Have we covered it here? No, we haven't covered it there. Tariff dividends, yeah, this video. When we covered the QE video, we also covered the budget required to have Trump release the $2,000 per household tariff dividend that he has set out to do this year. Now, this is big. This is the main thing that's driving liquidity right now, not the central bank balance sheet. Because the central bank balance sheet, we already know it's increasing. Once it starts increasing, they cannot just turn it the other way around. The only thing that's offsetting it is the TGA account now. And the TGA account is not controlled by the central bank. It's controlled by the government. So when can the TGA account start to increase and put the liquidity back into the system? AKA, when will the US government start to spend their checking account balance and put that liquidity back into the economy, back into the markets. I believe this will heavily correlate to the stimulus checks, the next round of stimulus checks, the tariff dividends that Trump has promised. And this obviously ties into their party's popularity in the election year, in the midterm election year. So we covered the tariff dividends here. You can go ahead and watch this video from last month if you want a quick primer on the amounts and what they need and the rough timeline. So TLDR, out of this $950 billion in the TGA account, they will need about $600 billion in order to fulfill their promise of the tariff dividend. And the last time that they have promised this was, I want to point you to the exact one, back here. So back in November, Trump has said that we've taken in hundreds of billions of dollars in tariff money over 2025 and 2026, and they're going to be issuing dividends probably the middle of next year. So when he said this, the prediction market odds spiked. You see right here, it spiked to about 60% chance that we will have the tariff dividend by June 30th, the middle of 2026. But since then, these chances have collapsed because, well, whatever it was, maybe it was insiders, whatever, but by January 11th, he came out and did another interview with the New York Times. Do I have that one right? Yeah, I have that one right here. Here is the interview that he did with the New York Times on January 11th. And in here, he was asked again, when can you fulfill this promise of the tariff dividends and what's required? And he says, well, it's probably going to be pushed back. I'm still going to do the $2,000 per household, but he says towards the end of the year. And that's when you see these odds really start to collapse on Polymarket. So the end of the year makes more sense because, well, first of all, if he is to do it this year, he's going to need congressional approval. But he says here, he doesn't believe that they need Congress approval anymore. Instead, they will have it coming from other sources. Okay? In my view, the only way he's going to be able to do this is if two things. Number one, he uses this as a big leverage to get the win in the midterm elections. Relative win, because it's not really a binary win. It's how many seats they can keep. And second is they're going to need to tap into executive power here, because that's what he says. Don't you need Congress to help you with that? No, I don't believe so. We have it coming from other sources. So this really points to the tariff dividend not happening in the middle of the year anymore as part of their campaign. Instead, it likely will come after the midterm elections. Okay, so putting that all together, how does this even make any difference for Bitcoin? We know that we need liquidity to increase in order for Bitcoin to have a better time. We know that the Fed is already playing ball. They are printing money and they are increasing the size of their balance sheet, even though it's very slowly. The main driver that's combating against this now is the government itself, is Trump and co. And they control the TGA account. Now, when can they let this TGA liquidity flood back into the system? Likely by the midterm elections, even shortly after that. So that's this line right here, November of 2026, roughly the midterm election date. And that's the first signal that I have for you guys is from now until the midterm elections, it's probably going to be choppy. Not only because of the macro, because of the politics, but also I'll show you in a little bit why in the chart as well, just based on the history of Bitcoin's prices in midterm election years. But this is the fundamental reasoning of why liquidity conditions will still be very choppy the first way to look at it is the TGA account likely will not release the liquidity until the midterm elections are over, until November, as according to Trump himself, he has said so during his latest interview. Okay, the other side that of the liquidity is the Fed. So we know that the Fed is increasing the size of their balance sheet starting from November, and this will run at least until April. But after it runs till mid-April, as we have outlined here in this video from last month, I'm going to show you that chart that I have put out. Yeah, right here with this kind of a trajectory is what they have outlined from now until April. So after mid-April, it's really anyone's guess what they will do next. Now, sure, in history, okay, once they go from QT as the balance sheet is going down back into QE when the balance sheet is going up, they don't just randomly cut it and let it go down again. So it should go up. But how quickly? Is it going to be 5 billion per month, 40 billion per month, or 100 billion per month? It really depends. And after April, starting from May, what's the big event that happens there? That's the new chair of the Fed coming in, Kevin Warsh. So Trump has officially named Kevin Warsh as his pick to replace Jerome Powell at the Federal Reserve. This was last week. And Jerome Powell's term ends on May 15th. So right after Trump made his pick of Kevin Warsh, a lot of uncertainty came into the market again because Kevin Warsh was not one of the popular picks. He was not ranking highest in people's predictions. And this spooked the market a little bit because Kevin Warsh is not a dove. He has not been a dovish Fed governor in his previous tenure. So from 2006 and 2011, in between this period, he did serve as a Federal Reserve governor. He was one of the voting members. And you guys know 2008, we had the financial crisis, and Kevin Warsh was one of the main proponents that pushed for the big bank bailouts. So after that, that round of heavy easing, heavy money printing, heavy bank bailouts, Kevin Warsh got in a lot of hot waters, let's say, a lot of pushback because people felt the residual effects of that after. So before he was in this conversation for the new Fed chair, he has really taken the other stance of recognizing that the Fed pivoted too quickly and the Fed printed too much money. And so he is in the camp that in his previous statements, he has said that the Fed, not led by him because this was before he was picked as the chair, but if he were to make recommendations to the Fed, he would say that the Fed needs to wait until the market has already crashed and then make a big pivot instead of letting it smooth ride like what Jerome Powell has been doing. So this is why it spooked the market a little bit because Jerome Powell is already being pretty hawkish towards the markets. There is going to be roughly one more cut from now until June of this year in terms of rate cuts. And people are scared because if Kevin Warsh comes in and he takes his public stance and he doesn't change it, then that might mean we only have one more cut for the second half of the year. And that's not going to be good because people have already been pricing in this really dovish Fed governor that's to be appointed by Trump. And Trump is going to tell him to just cut rates because that's what Trump has been signaling to the market. So when the new chair comes in, he's going to listen closely to Trump and we're going to have way more rate cuts by the second half of the year. So it's starting to conflict a little bit because Kevin Warsh was not in this camp of thinkers before. But I don't know if, that really matters that much because Ultimately, he's an appointee of Trump, and who calls the shots here? I really think it's going to be Trump. So we shall see. I think this is more of a uncertainty event that the people need to get through from now until May. So May 15th, Jerome Powell steps out of his chair position. Kevin Warsh comes in. And the moment he makes his first statement of, what his plan is, how he plans to take the Federal Reserve in a different direction or the same direction, and how different or the same that will sound compared to Trump's narrative and what Trump wants the Federal Reserve to do. Once we have that certainty, then I think the markets will price it in a lot better. So that's why May 15th is really the other main event to watch this year. So we have already laid these two out. We have the first week of November, the midterm election date, very important. And we have May 15th right around here. This is when the new Fed chair comes in and we have a bit of uncertainty that's being resolved by that time. Okay, so combining all of these, let's look at the charts. So if we are to just look at from top down, okay, let's look at prices. Let's look at Bitcoin price, Bitcoin cycles from market top to market bottom, how long it will last, and combined with these two catalyst events of this year to give you kind of roughly my risk framework for the rest of this year. So I'm going to put down May 18th, roughly May 15th here. Usually from the cycle top to the cycle bottom, it's about 1 year, 12 months. Many analysts have already talked about this, right? Here is 360 days. Here in December to December 2017, December 2018, that's about 1 year. Okay. And here again, November 2013 to this was January 2015. So this was a little bit over 1 year. This was 13 months. So roughly 1 year, 12 to 13 months. Now, if we map that to this cycle top, October 2025, that gives us roughly October to November 2026, let's say 400 days, a little bit longer than 1 year even, if it matches up with the midterm election date. So this is the timeline. This is roughly the longest bear market we can expect. Within this period, okay, when is a good time to buy? Obviously, you have Bitcoin just dropping a lot. When Bitcoin drops a lot, you buy. That's very clear. We'll talk about price in a bit. But in terms of time, there are two main uncertainty events. There is the Federal Reserve Chair replacement on May 15th, and then there is the midterm elections. We need to get through both of these events because they are negative events. They are uncertainty events. From now until May 15th, we are in the most uncertain period because we have both of these events yet to be resolved. So I would say from now until May 15th, probably going to be the biggest chop. And then after that, we could see Kevin Warsh start to already take the Fed in a new direction to match what Trump has been expecting the Fed to do. So maybe more uncertainty gets resolved in this period and we can slowly start to recover already. And then after the midterm elections are over, that's when both of these uncertainty events have been resolved. And that's when the market should be in a much better direction. Okay, that's in terms of timing. Now, I have explained the fundamental reason. Now let's look at price. So here I have mapped the last three midterm election dates. Okay, November 2014, November 2018, November 2022. And coincidentally, these were all bear market years on Bitcoin. Believe it or not. Maybe it's because it's 4 years. So in 2014, was the midterm election year bullish or bearish? It was bearish. And Bitcoin only bottomed after the midterm elections was over. Very clear here. You see midterm elections over, roughly 1.5 months after that, Bitcoin bottomed. Okay. And then here is 2018. The year was bearish leading into the midterm elections. And then shortly after, it's effectively right after the midterm elections, the market capitulated. And then we had a bottom 1 month after the midterm elections was over. Why? I don't really know. I don't have enough political background experience to tell you. But this is what happened. And then here is 2022. Again, midterm elections year was bearish. And right on the week of the midterm elections, the market capitulated on Bitcoin right here. And you may say, hey, like, was this a big coincidence? I don't know, but guess what happened in that week? The FTX collapse. So on November 2nd was the first public exposure of the FTX craze. And then by November 11th, they were all filing for bankruptcy, FTX and Alameda. Was this a coincidence? I don't know, but it certainly happened 3 times already. Now, are we going to get a market collapse around the time of the midterm election? I don't know. That's hard. That's very hard to predict. But I think it's not really an opinion. It's there is enough data points, last 3 data points, to say that in a midterm election year, it tends to be choppy and the market bottoms right around, if not shortly after, the midterm elections are over. Now, in terms of how much price can drop around the election times, it's different. So in 2014, it dropped quite a bit more after the elections, about 48%. If you count the wick, it's over 50%. Okay. And then in 2018, it dropped, 50% from the date of the elections. And then in 2022, it dropped around 25%. So this is interesting because here we actually had the biggest black swan event. The FTX collapse, the second largest crypto exchange, went under on the week, and Bitcoin only dropped 24%. The reason why, I think, is because most of that has been already absorbed by the market in the 6 months prior. And I believe right now we're in a much more similar market unwind compared to 2022 versus 2018 and 2014, because there is so much indiscriminate selling at the moment. Okay, so let's go into that point. So why is Bitcoin performing so poorly? And by poorly, I mean compared to the rest of the asset markets. We covered this point briefly before. I want to say probably this video, where we compared Bitcoin with gold and S&P, if I'm not mistaken. Here is Bitcoin compared to gold. And you see the high correlation of the 2 asset classes over the last 2 years until right here, 10/10, October 10th last year. And we all know what happened on October 10th last year, the biggest liquidation event in this single hour in crypto history. Now, what happened on that day, we still don't know. But one thing did change, and that's Bitcoin completely decoupled from gold. So here is the correlation of Bitcoin compared to gold. And here is gold as a lagging asset indicator on the chart of Bitcoin, because usually there's about a 14-week lag on the price of gold compared to the price of Bitcoin. And you see the two has been rallying simultaneously with that 14-week lag considered up until October 10th. Right after October 10th, gold went on a parabolic rally, continued, while Bitcoin went the opposite direction. And you see the correlation started to completely crash. Why? It's not that Bitcoin was changed. It's not Bitcoin was hacked. It's nothing public. It's definitely something under the hood that has happened on October 10th. And we are yet to find out what really happened. But something happened. Something happened that has led to this indiscriminate selling. So whatever it is, we should find out at some point. And when we find out, it's probably when it's actually over. So this is why I say it's very similar to the FTX crash in 2022, because during this period, we had two things. First, we had the Terra Luna crash, which was May 9th, 2022, back here, right here. So this led to just pure bloodbath in Bitcoin, where Bitcoin broke this previous higher low, shattering all dreams of like a continuation of a super cycle, an uptrend, and then it just kept going lower, indiscriminate selling. Because, well, Luna collapsed. And 6 months later, that eventually led to the unwind of FTX, and FTX collapsed. Here, we also have indiscriminate selling. We have these lows, the higher lows. It was touched. We had the bounce, but then this was a very weak bounce. And then now we again have 3 straight weeks of selling. Just huge, huge sell. Why? I don't know. I'm not a Bitcoin whale to tell you that. I don't think most people can tell you the fundamental reason, but somebody is selling. So if we are going to get this early sell in the bear market, then it's going to really buffer the late stage capitulation that we have towards the midterm election dates, towards November of this year. So that's why I say, even though the market will be choppy from now until May, especially, and then from May until November, it'll still be choppy, but after the midterm election date is over, it should get a lot better. Even though we have all that chop, prices are already very, very good. Okay, now let's actually look at the price. So how low can Bitcoin even go? Historically, here are the main moving averages. We have, let's not even look at the moving averages yet. Let's look at just pure Bitcoin bottoms. So typically there are 3 bottom targets that people talk about in a bear market. Number 1, the highest one is usually the touch of the previous all-time high right here, which was 65K. We are already here. We are already at the 2021 bull market high. We're at the same price now. And if you look at that same analysis in the previous cycle, here, December 2017, this was 19K, right around 20K. And we went to that level in the first major sell in the bear market in June 2022. So this is another similar point to 2022, to June 2022. We have made the first retest of the previous bull market top, 65K. So 65K right here is just like 19K, 20K-ish in June 2022. Let's say it that way. Because it's the same level as the previous bull market top. Very simple. So with that assumption, can we head lower? Well, the answer is yes. In the last bear market, if we look at the moving averages, we still have the 200-week simple moving average, which is at 58,000. The 200-week simple moving average was touched in June 2022 and briefly wicked below, and then it started to consolidate a bit around there before going quite a bit lower than that, about 25% lower after FTX collapsed. But the 200-week simple moving average is also significant in 2020 during the COVID crash. In 2018, it marked the absolute low of the bear market. And even back here in 2015, and it was touched 4 times in the bear market, but it never closed below on a weekly time frame. So that's the second level that we can watch. The first level is 65K, the previous all-time high. We are already there. If you agree with that thesis, it's already a good time to buy. The second level is 58K, the 200-week simple moving average. This is my target. I have laid this out in multiple videos since basically like 2 months ago, right after Bitcoin broke below the 50-week simple moving average, right around here. Since Bitcoin broke below this bull market support, we were targeting the 200-week simple moving average. Now, full disclosure and full whatever, I did not expect it to get so close to it so quickly. My target of a revisit of the 200-week SMA is probably like late stage of this bear market, somewhere in these ranges, a few months down in the future. But nonetheless, we are already here. We are at 63.5 and the 200-week SMA is at 58. We are barely 9% away from this level. I mean, that's crazy to think about even. Just, what is this? Like 4 months into the bear market, we are almost at within 10% of the 200-week simple moving average. This is really, really oversold, heavy oversold territory. So no question about it. This is the time to buy. No matter what you look at on, time. Oh, there is the uncertainty of the Fed chair. There is the uncertainty of the midterm elections. Yes. But ultimately, how much lower can Bitcoin go? 200-week SMA. Once we get there, and if we get there, if you are able to buy Bitcoin at the 200-week SMA at 58K, what does that represent? That represents such a good buying opportunity that you would be in profit for all of the last, what is this? I mean, I don't know if it got below here, but you will be in profit for the last 13 years. Out of the last 13 years, if you have bought Bitcoin at the 200-week SMA, you will be only not in profit for less than a week here, less than about 1 week here. And then right in the week of the declaration of the pandemic, you were in a little bit of loss. And down here, this is the only period that stands out, which was 37 weeks, 266 days. So out of the last 13 years, if you have bought Bitcoin at the 200-week SMA, you will be in profit for like over 12 years of the last 13 years. That's the data. So you don't have to think too much. And we are 9% away from that. But as we speak, it just dropped a little bit more. We are at 63.5 0. So we are 8% away from the 200-week SMA now. It really is the time to buy. There is no question about it. Buying at the 200-week SMA has always worked over the last 13 years. Can it maybe not work this time? Sure, but that's the classic thing that people say, hey, this time is different. To everyone that's calling for like 40K this week, you're basically saying this time is different. And I don't think so. Okay. Now, can we get a lower drop? Can we get this kind of a scenario like this? Where, you know, we have some sort of big unwind and someone goes under and we see some sort of collapse, a black swan event like the FTX crash. Sure, it's possible. But we may not see that right away. Remember, from May 9th until November, we had 6 months between the Luna crash and the FTX crash. So if we have that, same thing repeat from October 10th, 6 months down the line, we're looking at right around mid-April. So we might not see that until mid-April. And even if that happens, okay, how much lower can we really get? Remember, FTX crash, the second largest crypto exchange. By far, nobody has ever seen an event like this. It crashed the market on that week 25%. And if you have bought at the first touch of the 200-week SMA until the absolute low of the FTX crash, you're looking at right around 30% lower. If you take this, you map it to right here, buying at the 200-week SMA, 58K, you're looking at 40K. This is what some people will say. Hey, look, like last bear market, we had a 30% drawdown below the 200-week SMA. But my answer is, are we going to see another FTX crash? I mean, I'm not counting on it. And really, what's the point of calling for this? That's like in 2022, okay? Rewind time back to June 2022, right here. Bitcoin just started to crash, drop, whatever, indiscriminately from 40K down to 20K within 2 months, which is basically what we have right here. And you look at Bitcoin, Bitcoin is at like 24. It's right about to touch the 200-week SMA 22K. Do you say, hey, look, let's wait for 18K? Or do you just buy? Ask yourself that question. And how many people actually manage to buy down here? The answer is nobody. So can it drop below the 200-week SMA? Yes, absolutely. It's possible. But is 58K not a good price? No, it's an exceptionally good price to buy. It's just like buying at 22K in 2022. Ask how many people actually bought below 20K and how many people bought Bitcoin after FTX crashed and bought at 16 to 17K. Very few people did. And what difference did it make if you bought at 22 or if you bought at 17? Not much. The only difference it could make is if you take on leverage, if you take on a very short-term trade, then that's risky. So part of my plan right now is to buy spot. As we get very close to 58K, even as we speak, we're at 62.5. The closer we get to it, the better. This is my bottom line. This is the time to buy. I am starting to buy. I don't have that much cash left, but I am heavily buying. Whatever money I have, I buy Bitcoin at the 200-week SMA. Because it has worked in the last 3 bear markets to buy at these levels. So I'm not going to be that guy that tells you, hey, wait for the last 20 to 30% and then we can buy the absolute bottom tick. I'm not going to be that guy. Instead, I'm going to be that guy that says, hey, let's start buying. This is the time to buy. Because bit of, fundamental perspective thing. There are all kinds of market participants in crypto, in Bitcoin. You have the TradFi guys, you have like the ETFs, you have the Michael Saylors of the world, you have the traders, you have whoever, you have the altcoin guys. I have seen Bitcoin fluctuate huge over the years. One thing that I still have is this retarded blind belief in Bitcoin. That's something I can absolutely offer you. So that's something that Larry Fink cannot offer. That's something that the gold bugs cannot offer. That's something that the Fidelities, the asset managers cannot offer. When they see Bitcoin drop and they see gold going up, they want to buy gold. They don't want to buy Bitcoin. I don't want to buy gold. I don't want to buy the S&P. I only want to buy Bitcoin when it's cheap. Because I just have so much more experience dealing with the volatility of Bitcoin, and I have that belief. So I think that's something I can offer, is actually come on here and just put it out there and say it. I don't have anything to lose because I've been buying Bitcoin above 100K, above 90K, right? All this time. So I got nothing to lose here. And if anyone is going to be able to buy Bitcoin for cheap, it's us. It's us crypto participants that have lasted for so long. If you're still watching crypto videos, as we get these kind of candles, we are the true believers, really. And it's time. So any Bitcoin I buy here, this video even, as we make it, it's going to be a timestamped, in history, like two years down the line. And then as the next wave comes, because it's inevitable, I know Bitcoin will make new all-time highs. I think everyone that still watches Bitcoin videos knows that it will make new all-time highs. We can bring these mindsets and our entries back to the institutions and whoever, the Michael Saylors of the world, and say, hey, look, we were still bullish on Bitcoin at 62.9K because we have lasted through the bear markets and we know this is cheap. So that's it. I mean, all the fundamentals aside, I think this is the way to go. 58K is right in reach. It's time. This is the time to buy cheap Bitcoin. Here is another retarded bull on Bitcoin live stream done. I'm going to be making a lot more of these because I know these will be some of the best receipts that I'll have on all of the rest of the market come next year. The more times I can come online here and say, hey, buy Bitcoin at 60K, 55K, 50K, 65K, whatever, the more people will have a good time next year when Bitcoin is much higher. So expect me to come online and just be retardedly bullish while Bitcoin is cheap more often. Okay, that's it. Thank you guys for joining the live stream. Follow me on X at VirtualBacon0x for quick alpha, quick trades before these in-depth videos. And of course, share this video with a friend. For anyone that still needs a bit of hopium to be able to pull the trigger to buy Bitcoin while it's cheap, share this video with them. Leave a comment, like the video, boost it for the algorithm, all that good jazz. All right. Thank you guys for watching, and I will see you on the next video and next live stream.